There's a certain type of company that most investors completely ignore because it doesn't sound exciting. It's not the newest artificial intelligence stock, it's not the fastest growing software company, it's not some small startup that could double overnight. But sometimes the companies that quietly power the economy end up becoming some of the most important long-term investments of all. And that brings us to AEP Stock, also known as American Electric Power. This is one of the largest electric utility companies in the US. AEP serves millions of customers across multiple states, owns one of the largest electric transmission systems in the country, and plays a major role in keeping electricity flowing across America. And right now, the company is sitting directly in the middle of one of the biggest long-term trends happening in the market today. The demand for electricity is growing. Before we get to the video, if you're new here, my name is Elliot. I make videos about investing, the stock market, and I also share updates on my own portfolio, which is on the Robinhood app. If that sounds like something you'd enjoy, consider subscribing. I upload videos every 2 weeks. Now, when most people think about AI, they immediately think about companies like Nvidia and Microsoft. And while those companies are obviously important, there's another side of the AI story that investors are starting to pay attention to. Artificial intelligence requires enormous amounts of electricity. Data centers use huge amounts of power, and as AI becomes more advanced, power demand continues to increase. Utility companies are becoming increasingly important because somebody has to generate that electricity, move it across the grid, and support the infrastructure behind it. And this is where AEP becomes extremely interesting. American Electric Power owns one of the largest transmission systems in the country, with tens of thousands of miles of transmission lines spread across multiple states. The company serves roughly 5.6 million customers and operates across states including Texas, Ohio, Oklahoma, and Kentucky. Many of these areas are seeing rising demand from manufacturing faculties, data centers, and population growth. This is not just a traditional utility story anymore. AEP has discussed growing demand from large customers, including data centers. The company has also increased its projections for future electricity demand, with much of that growth tied to data center development and other large power users. And honestly, that changes the long-term picture. For years, utility companies were often viewed as stable but slow-growing investments. Investors typically bought them for income and consistency, rather than growth. But that environment is changing. Electricity demand in some regions is growing at a pace utilities have not experienced in decades. As more data centers are built and more industries require reliable power, utility companies could play a much larger role in the economy than many investors previously expected. One thing investors should understand about AEP is that it remains a regulated utility company. That's important because regulated utilities tend to generate relatively stable cash flow. They are allowed to earn approved returns on infrastructure investments through the rates they charge customers. That means when AEP spends money upgrading transmission systems, expanding infrastructure, or improving the electric grid, those investments can support future earning growth. And the company is spending a lot of money right now. AEP has recently increased its 5-year capital investment plan to approximately $78 billion. Management has indicated that strong electricity demand is creating additional opportunities for infrastructure investment in the years ahead. That is a massive amount of spending. While some investors may be concerned when they hear about such a large investment plan, utility companies operate differently from many other businesses. Infrastructure projects often become part of the company's regulated asset base, which can support future earning growth over time. Of course, there are risks. Utilities are capital-intensive businesses. They require large amounts of investment, they use debt financing, and interest rates can have a meaningful impact on their financial results. If interest rates remain elevated, utility stocks can sometimes face pressure because investors compare them to other income-producing investments. Higher borrowing costs can also make large infrastructure projects more expensive. That's something investors should keep in mind with AEP. Something else worth watching is affordability. Electricity demand may be rising, but consumers still want energy costs to remain reasonable. As utilities invest more money into infrastructure, there is always a balance between growth and customer cost. Even with those risks, the long-term demand outlook remains strong. Management continues targeting long-term earnings growth of roughly 7 to 9% through 2030. For a utility company, that's actually a solid growth target. Historically, many utility companies have grown at a slower pace. That's one reason investors have become more interested in AEP and other utilities that are positioned to benefit from rise in electricity demand. And then there's the dividend. AEP has long been viewed as a dividend stock, and that remains a major part of the investment story today. The company has paid dividends for decades and continues to be popular among investors looking for income. As of mid-2026, AEP's dividend yield is around 3%, providing investors with income while they wait for the long-term growth story to play out. The company has also increased its dividend over time, which is another reason many long-term investors continue to follow the stock. Another reason investors have been paying attention to AEP recently is its stock's performance. At the time of recording, AEP stock is up around 11% year to date. While past performance never guarantees future results, it does show that investors have become increasingly interested in the company's long-term opportunities. Now personally, when I look at a company like AEP, I don't view it as a stock that's suddenly going to triple in a year. That's probably not the right way to think about a utility investment. Instead, I think the appeal comes from the combination of stability, infrastructure growth, rise in electricity demand, and shareholder returns through dividends. It's one of those businesses that quietly becomes more important as the economy evolves. And honestly, the AI trend may end up helping utility companies more than many investors realize. Everyone wants to talk about the companies making AI chips, but fewer people are talking about the companies that provide the electricity needed to power the entire system. Without electricity, none of this works. No data centers, no cloud computing, no AI training system, no large-scale digital infrastructure, and utility companies are becoming a bigger part of the conversation. Another thing that makes AEP interesting is its transmission business. As electricity demand grows across different regions, the ability to move power efficiently across the grid becomes increasingly valuable. AEP already owns one of the largest transmission networks in America. That gives the company an important position as electricity usage continues to grow. Now, from a valuation perspective, utility stocks usually don't trade like fast-growing technology companies. Investors often focus on earning stability, dividend income, and long-term growth opportunities. Because AEP stock has performed relatively well recently, some investors may argue that part of the optimism surrounding future electricity demand is already reflected in the share price. That's a fair point. But at the same time, if electricity demand continues growing throughout the next decade, the opportunity for companies like AEP could still be larger than many people currently expect. This is also the type of stock that may appeal more to long-term investors than short-term traders. The real story here is probably not what happens over the next quarter. The bigger story is what happens over the next 5 to 10 years as America expands data center capacity, upgrades the electric grid, increases manufacturing activity, and requires more electricity across the economy. For years, utilities were viewed mainly as a defensive investment, but the conversation is starting to change. Electricity is becoming increasingly important to economic growth, technology development, and infrastructure expansion. So when I look at AEP stock, I think the bigger question investors need to ask themselves is simple. Do you believe electricity demand will continue rising over the next decade? Because if the answer is yes, then companies like AEP could end up playing a much bigger role in the future economy than many investors currently realize. AEP is not the flashiest stock in the market. It probably won't dominate headlines in the way Nvidia or Tesla does, but sometimes long-term investing is about finding companies that quietly benefit from major trends while everyone else is focused somewhere else. And right now, electricity may be one of the most important long-term themes in the market. So overall, I think AEP is a very interesting utility stock to watch. It offers stability, infrastructure exposure, dividend income, and potential long-term growth tied to rising electricity demand and artificial intelligence infrastructure. There are definitely risks, especially related to interest rates and capital spending, but the long-term story is more interesting than many people realize. And honestly, utility companies may end up being some of the biggest winners from the AI boom over the next decade. If you enjoyed this video, make sure to give it a like, subscribe to the channel, and let me know in the comments below. Do you think utility companies could be some of the biggest winners from rising electricity demand over the next decade? And we'll see you next time.